Hey folks, how is the multifamily residential market doing here in Las Vegas? Well, let's find out. I'm Justin Miller, principal and co-founder at the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people buy and sell condos and townhomes. We help people build wealth through real estate. If you're thinking about buying or selling, or you just want to be informed, these videos are for you. I hope you enjoy them and get a lot out of them. Please share them with your friends, your neighbors, your colleagues, your family members, anyone you think might benefit by having an accurate view of what's actually taking place in the real estate market here in Las Vegas. Okay, so this is the April 2024 market update for condos and townhomes. We separate those because they are actually two significantly different subcategories of multifamily residential. They are statistically unique. They are different populations of data, and these markets may not always move synchronously. So it's important to understand what's actually taking place within each market to be able to discern the differences to benefit yourselves, whether you're buyers or sellers, so you understand what's actually taking place. All right, April 2024 market update. That means we're looking at data for March of 2024. We're making month-over-month comparisons, so what happened between February and March, and year-over-year comparisons to try to deal with some of the seasonality issues. We look at March of 2023 relative to March of 2024. And actually, this is important for me to note. I've said it a couple of times on the single-family market update video, but I've not actually noted it here, even though it's most significant here. The data is collected on the 7th of every month, and I record these videos as I get the chance, usually on the 8th, but I've changed the publication schedule. The single-family update will come out on the 7th or 8th of every month. I've shifted the multifamily update so it's not coming out at the same time or a day later. It now will be issued on about the 15th of every month. So possibly a day earlier, unlikely, maybe a day later, usually the 15th of every month. That gives me the opportunity to do a better job with the editing while also taking better care of all of my clients. I don't have to take like a two-day block out all of a sudden, around the 7th of every single month. I get to schedule things a little bit more appropriately. Similarly, with regard to my newsletter, if you receive my newsletter, I've shifted that. It used to come out on the 15th or 16th of every month. It now comes out 1 week later. So single family video comes out the 7th or 8th, the multifamily video the 15th, and the RE Insights newsletter from Chong Miller Group comes out the 21st or 22nd of every month. And then that way we've got a more consistent scheduling process. You know when things are actually going to be appearing, and you can rely on that schedule. All right, having said that, let's dive into the numbers. And per tradition, let's look at condos first. Condo pricing was, the trend here was divergent from all of the other submarkets in the Las Vegas Valley or Las Vegas metropolitan statistical area. Condo prices went down in March 2024. They fell from $248,500 to $241,250. So they fell just over $7,000. That's a drop of 2.9%. Now this is interesting. Those of you who watch the videos on a recurrent basis know that last month we saw townhome prices come down. That did not happen this month, as I just alluded to. These condo prices are the only ones that came down in March. I had suggested last month with regard to townhomes, it may be a small number problem. In statistics, when you're dealing with small numbers, a small change in one direction or another on count variables such as number of sales could have a bigger than appropriate impact on other variables such as pricing. And so if a sale shifted from March and closed early in February, or shifted from March and closes later in April, that artificial change in the number of transactions may influence significantly the median price. I think that that's all that's happened here. So price came down 2.9%, a fairly small drop, but $7,000 in the condo market. We are, however, up 7.5% from 224,500 in March of 2023. So that's still better than average annual gain. In the Las Vegas Valley, we tend to look for annual gains being between 5 to 7% is the more typical sort of average state of the market. So we're a little bit above that 7.5% annual price gain for condos. By the way, single family homes, we saw the price gain of 9.5%. This is the first month in quite a while where condos have not outperformed single family homes. So a little bit interesting. We've seen a slowing in the rate of growth of condo prices. I don't think we're actually seeing a drop in condo prices. I think we just have a statistical fluke that took place in March. Okay, now that's pricing, but what about our internal measures for the market, supply and demand? Well, we always look at demand first, and we look at demand in two ways. That is closed sales. So buyer negotiates with seller, gets into a contract, goes through the escrow process, and actually closes on the sale. That closed sale at the median price. If we're still in the escrow process, it's referred to as a pending sale. That's also a demand measure. We'll look at that in just a minute. Closed sales 332. That is up 14.1% from 291. So that's a pretty healthy gain. Now, there are seasonal issues that we would expect sales to be going up at this time of year because we are at the end of winter, beginning of spring. So it's not a real strong growth in the number of closed sales, but we are seeing appropriate increase in closed sales here. We are up 1.5% from the 327 closed that we saw in March of 2023. I will note, actually, this is kind of interesting. On the closed sales, 332, we only saw 1 month in 2023 that had higher closed sales than that, right? So sales transactions are still a little bit weak, but last year was so weak that we actually saw only 1 month in the entirety of 2023 that had sales volume above the 332. So while our seasonal growth is about appropriate, we might be looking for a little bit stronger growth. We are really on an uptrend from what we had seen in 2023, where we saw volume-wise very weak activity. A significant part of that was predicated on high interest rates. What did interest rates do in March of 2024? They remained approximately flat at approximately 7% all month long. So the last week, the week ending April 4th, actually, we saw interest rates, 30-year fixed rate loan interest rates come down to 6.91%. So 9 basis points lower than 7%. And that was lower, right? So that was just the last couple of days of March. Throughout all of March, we were very, very close to 7%, slightly over, slightly under. So high interest rates, and we still had sales volume, meaning demand, that exceeded all but 1 month of last year. So that's actually really good news. Now, what about pending contracts? So this is the other measure of demand. It's interesting, pending contracts, buyer and seller negotiate into a contract, but it's not yet closed, 419. That's a really good number. That is up a really strong 34.7% from 311. That's 108 condo contracts higher than what we saw last year, more than a third higher than what we saw last year at this time. We are up 37.8% from the 304 pending contracts that we saw last year. Really, really good number there. That indicates really significant demand existing in the condo market. So that's fantastic news. Now, that did take place against a backdrop of very slightly retreating prices on condos, but not like a big drop. So we're seeing, with high interest rates and continued approximate stability in pricing on condos, we're seeing really good demand numbers and demand growth, actually. Okay, so if demand is doing that, what's going on with supply? Because to actually get into contract, we need not just a buyer, we need a seller. Well, we had 894 condos sitting in inventory for sale at the end of March of 2024. It's down. It's down. It's down 1.9%, not a whole lot, but it's down from 911 that we had seen in February of 2024. Now, this is really consequential. Every year we see a very strong seasonal pattern in terms of volume. Some months are high, some months are low. The lowest month of the year in terms of transactional volume is January. The lowest month of the year in terms of for sale inventory is December. And then we see throughout the winter and throughout the spring growth in inventory to get what's traditionally referred to as the spring selling season. Maybe a slight misnomer, but we get entrance into the market. We clearly, with those demand numbers we're seeing, especially with the pending contracts that we're seeing, we are getting buyers into this market. But for sale inventory came down, even if it's just slightly. It came down. That's really, it's counter-cyclical. It's counterintuitive of what we would think we'd be seeing right now, and it's a problem. It's creating a problem in the market, and ultimately that problem both reduces the opportunity for buyers, the options for buyers, and increases pricing. Because that's what happens in the marketplace. When you have increased demand and lower inventory, you get prices going up. There's just no two ways about it, regardless of what you may see on some YouTube channels. That's what they're telling you makes no logical sense, does not exist for long periods of time in a marketplace. Okay, so we do have another way to look at inventory, and that is newly listed resale condos. This is an existing owner decides, you know what, I want to sell. I'm going to go ahead and put my condo on the market for sale. They enter into the inventory pool for buyers to look at. In March of 2024, we saw 559 newly listed resale condos come into the marketplace. Now, this is up a healthy, not huge, but a healthy 17.2% from the 477 that we saw come into the market in February of 2024. So that's good. It's a seasonally appropriate gain. It's not enough to actually build inventory, and so we actually did see inventory come down the 1.9%, but at least it's not allowing inventory to just further crater like we're seeing in both the townhome and single-family home spaces. So inventory may be starting to stabilize here. It's a little early to call a bottom, but it's possible that we're actually seeing some stability. Now, we are up a very substantial 50.1% from the 379 newly listed condos in March of 2023. But in 2023, we saw really low inventory numbers all year long. We actually saw really low transaction volume all year long. So I do want to caution you on that annual comparison here. We are looking for overall new into the market a little below normal for the time period 2018 to 2022. Now, I will say that new into market, to give you an idea of how weak 2023 was, That new into market's actually the highest we've seen since July of 22. So all year 2023, as well as the second half of 2022, we were seeing really low new into market numbers, as well as low inventory numbers, and we're still going lower on inventory. So where are we overall? We've got very weak supply, we've got definite increased demand, and we've got pricing that's approximately stable. One other note I want to make here, every month since the middle of 2020, I've been talking about back on market, and back on market numbers continue to remain incredibly elevated, right? In any market, you see some contracts fail. So when an escrow falls out, it fails. Buyer and seller walk away, they go their own way. Sometimes a buyer gets their earnest money deposit back, depending on the reason for the collapse of the contract. Sometimes they don't, and the seller gets to keep that money. In a normal, healthy market, there are contracts that will fail. A buyer loses their job, for example, or a seller's transfer to a new location falls through and they need to cancel because they need to stay in their place. So those are examples of why a contract might fall apart that are kind of normal. And in a normal market, we tend to see monthly back on market numbers in the 10 to 12% range. Well, we've been hovering above 25% and just below 33% for 4 years now. And where are we for March of 24? 166 condos that were sitting in contract fell out. That's 33.3% of all contracts that existed in the month of March collapsed. That's a deplorable statistic. I mean, that's really, really bad. Now, why are these contracts collapsing? Ask your real estate agent. Reach out, talk to me. I'll gladly share the information with you. If you're not using me as your real estate agent, talk to your real estate agent. Find out what they say about why all of these contracts, right? 3 times what would be normal in the marketplace. Why are all of these contracts collapsing? Failed contracts. A failed contract is bad for a buyer. You got to start all over. You may have already spent money for an inspection. You may have already spent money for an appraisal. You're out time. You're out dollars. You may get your earnest money back depending on why the contract collapsed. You may lose your earnest money depending on why the contract collapses. Bad for the buyer. Bad for the seller because you had plans for the future. You were selling for some particular reason. You found a buyer. You were willing to sell to that buyer at that particular price that you're in contract at. You've got to start all over. And by the way, this 33.3% statistic, this is actually a conservative measure of failed contracts because it's the only data we actually have on this, but B, it does not capture failed contracts that did not go back into the market for sale, right? So a seller may have decided, you know what, this sucks, I'm going to just rent out my condo. Or I'm going to continue to live here. I'm just going to take my condo off the market. Those do not capture as back on market. So any of those, that's additional failures in the marketplace. This is a really, really high number, right? And this is at the top end of what we've been seeing over the past 4 years. I don't think we've had a single month that's gone over 33% until now, 33.3%. Literally a third of all condo pending contracts in March of 2024 failed. Conservatively measured, failed, and came back into the market. This is really bad for all market participants. And there are reasons this kind of thing is happening. You want to make sure as a buyer or as a seller, you're understanding why these things are happening and what maybe you can do to protect yourself from this. There are ways to protect yourself from a lot of the reasons that are causing contract failures. We're very good about making sure our clients are protected, whether you're on the buy side or the sell side, by pre-negotiating solutions to problems that are materializing in the marketplace. And therefore, our back on market statistics are less than a tenth of what these numbers are. We're really good about protecting our clients. Once we get into contract, so we get you into a good contract, And then we protect the contract and we make sure you get through the contract. And we're very successful about it. Please, if you're thinking about buying or selling, make sure you're asking your agent about this. Protect yourself about these issues. And if you need help, feel free to reach out to us. Like I said, we at the Chong Miller Group, we help people buy and sell. We help people build wealth through real estate, partly by protecting contracts around the things that are tearing these contracts apart. All right, so that is the condo market for March of 2024. Let's dive into townhomes. Before we do, again, please, if you've not already, subscribe to these videos, smash the like button, and share these videos with your friends, your neighbors, colleagues, family members, anyone who you think may benefit from having a real view of what's actually taking place in the market. All right, with that said, townhomes. Median sale price, $333,500. Now, this is good news. This is up. It's up 7.6% from the $310,000 that we saw in February of 2024. Now, in February, we had actually seen townhome prices drop, and I commented at that time it was likely a statistical anomaly based on the shifting of some of the sales that could possibly have closed a month earlier or the month later. And so it made the market appear more narrow, and that happened to occur around contracts that were at higher price points, more close to the norm for contract pricing. That seems to be exactly what took place. So we had fallen kind of substantially in February. We've gone back up substantially in March. And so with the townhome market space, because the market is so small, you have to kind of take all of the data with a little grain of salt and maybe average across a couple months, 2 or 3 months, to see the actual trends that are taking place, as opposed to jumping on a 1 month change as being a real change in trend. It's true in condos as well, but the townhome market is half the size of the condo market. So the townhome market is even more susceptible to this kind of thing. Townhome prices up 7.6%. I do not believe that's a massive change in the pricing trend in the townhome market segment. I think that actually the trend is a little bit slower. Now, there's something else I also pointed out. Over the past year in the townhome space, we've seen kind of a channel on the pricing where prices have sort of hovered within this channel between $310,000 and $335,000. So we touched the lower end of that channel in February. We're basically at the upper end of that channel here in March. And so we may be looking at a little bit of a breakout, given what we're seeing, generally speaking, in other segments of the market, where we might start breaking through that channel, but we don't have confirmation of that yet. Now, we are also up 6.2% from the $314,000 median sale price on townhomes that we saw in March of 2023. We are up 6.2% year over year. Single family homes, we were up 9.5%, and condos were up 7.5%. Right? So that's what the three market segments look like for pricing. All right, what about demand measures in the townhome space? Really quite strong, actually. We saw 200 closed townhome transactions in March of 2024. That is up 24.2%. Up by about a quarter from the 161 sold transactions that we saw in February. Now, as I've noted, we would expect seasonally to see increased transactions as we go through the winter and into and through the spring. But this is actually a really strong gain, almost 25%. This is above what we would normally see on a seasonal basis. So strong indication of demand. So what about year over year? We were down 13.4% from 231 closed townhomes in March of 2023. We do need to be a little bit careful on the year over year comparisons. We're not getting good seasonal adjustments on some of these numbers because 2023 was kind of an exceptional year, both on low transaction volume as well as some spikes monthly in what was taking place. So be a little bit leery with some of these year-over-year calculations, but year-over-year down. Nonetheless, looking at pending contracts, 238 pending contracts were written, executed in the month of March of 2024. This is 38 higher than we had for actual closed sales. So that's a really good indication that April is going to be stronger still than what we saw in March. We are up 22.6% from the 194 pending contracts that were written in February of 2024. So that's a good growth rate, again above normal seasonal patterns that we may see, but we are down 11.5% from the 269 that we saw go into contract in March of 2023. Okay, so that's the demand measures, with pricing increasing even in the face of interest rates that are approximately flat at the high level of 7%. We saw demand clearly coming into this market. Sustainable demand because pendings are above the actual closed. Okay, but we have the other side of the market. We have the inventory side of the market, the supply side of the market. What took place? Well, what took place was, in a normal market, we have supply. We're not in a totally normal market here. In fact, supply is always the lowest in December and goes up through the winter and through the spring. And if you've been listening to the other segments of this video, as well as the other market update for single family, I start to sound repetitive in saying that, but it's true. There's a very strong, discernible seasonal pattern for inventory sitting in the market. It's more discernible actually than the sales numbers. If you look at a chart, you just see this big spike down that takes place every December. And then we grow inventory from that point. Well, that's not what we've been doing. 399 standing inventory townhomes. That's townhomes for sale awaiting a buyer in March of 2024. That number is down 9.3% from the 440 townhomes standing in inventory in February of 2024. That's a really big drop, and it's completely counter-cyclical, counter-seasonal. This is just a further depletion in inventory that's problematic, right? Low inventory means buyers have fewer options, and buyers who need to buy are competing against the other buyers who need to buy in a smaller pool, and that will always drive up pricing, right? There may be a month or two of exception to that, but that's the market dynamic. That's what happens. Price becomes the mechanism by which rationing takes place in a capitalistic free market. You have lower inventory, you have higher demand, right? That means prices are going higher, even at high interest rates. Now, inventory is down 33.3% from the 598 that we saw in March of 2023, right? We're just chewing through this inventory. There's almost nothing left here for townhomes for people to actually be able to buy. If we think about 399 as the standing inventory, if we think about that as like 400, right? One below 400. We had sold of 200. That means if we continued that sold pace and we received no new listings into the market in just under 2 months, right? In 1 month and 29 and a half days, we will have depleted 100% of the townhome inventory. If we think about it in terms of pending contracts, we had 238 pending contracts written. If we went 6 weeks at that pending writing rate, the writing of contracts rate, that means that we would have depleted all of our inventory in a month and a half. We've got really low inventory. In normal marketplace, we see inventory between 5 and 6 months here in the Las Vegas Valley. That's normal. right, over long periods of time. We haven't been there for quite a while, but that's normal over long periods of time. We're sitting at a third of that. Very, very low inventory. And inventory isn't just low, it's going down counter seasonally. This is really a problem. We need all types of housing to be coming into this market for sale, but boy, we really need townhomes to be coming into this market for sale. What about newly listed properties coming into, newly listed townhomes coming into the market, where a seller, an owner of an existing townhome says, I want to sell now. I'm going to list my townhome. 285. That's up. It's up 14% from the 250. So that's really good. That's right. We would expect to see newly listed increasing all the way January through June, typically every year. So it's nice to see that that's actually going up. But it's going up at such a low rate, the inventory is actually still going down. The inventory last month actually fell by 41 units or 9.3%, even though new listings of resale townhomes went up 14%. We are down with new listings 8.7% from the number that we saw in March of 2023. We've got a real supply problem in this marketplace. And that means prices will be going up. Doesn't matter who you listen to on YouTube. That's just the way markets work in a free market economy. There's just no two ways about it. There may be an aberrant month or two. This is the only way you get markets clearing with high demand and low supply is by increasing prices. So whatever doom and gloom you're listening to on YouTube, and it still exists out there, right? Even in the face of 4 years of contrary real data information. We came out of the pandemic lockdown 4 years ago, right? This month, right? We went into it 4 years ago this month, at the middle of March, and we're coming out of that 4 years. And we've seen prices going up and up and up. We've seen sales continuing, and we've seen overall inventory going down and down. That's the real data. That's what's actually taking place in the marketplace. And you go look at my market forecasts. They all are spot on with these trends. That's not true for the other people that you may go back and look at what they've been saying and forecasting. And there's been a whole lot of people who just, if they actually admitted to what they said, if you go back and look at their stuff, their face is covered in egg, right? But they don't care. They keep putting this stuff out because doom and gloom apparently sells, even if it's just totally not real. All right, now in the doom and gloom category, the real thing is this. It's the back on market. So we've got closed sales, right? Those are real transactions that actually started and ended successfully. We have pending contracts. Those are real transactions that start, but not all pending contracts close. Some of them fall out, they fail. Normal failure rate, normal market, 10 to 12%. Every month we see some loss in terms of contracts that are going to fail. Since the second half of 2020, almost 4 years, we've been seeing very elevated numbers of back on market, between 27 and 33% across all market segments in the Las Vegas Valley. Now, this is true across the country, but the data we're looking at is Las Vegas metropolitan statistical area. Well, what was it in March of 2024? 87 townhomes came back in the market. That's 30.3% of townhome contracts in March failed. They collapsed. Almost 3 times the normal 10 to 12% statistic, right? Really elevated. Almost a third in townhomes, fully a third in condos of contracts just collapsed, right? That's almost as bad as playing blackjack. It's worse than going to right? Some of the other games that you can play here in Las Vegas, to think that only 66% of the time, in this instance, 69.7% of the time, you'd be able to know that, hey, your contract is stable and you're going to actually be able to get to the end of it, and you will have successfully sold or successfully bought a townhome. But it's not random, right? There are reasons for these failed contracts, and you can talk to me about it. You can talk to, if you're using a different real estate agent, you can talk to that person about it. You can commiserate amongst yourselves and figure out for yourself perhaps what's going on that's causing this to happen. There are real reasons. They're not random distributions of, well, there's just bad news in the environment. That's not what it is. There are real reasons these contracts are failing. You should make sure you understand, make sure your agent understands and can speak to you knowledgeably about what those reasons are, and that your agent can come up with strategies to protect you from these non-randomly distributed bad events that are taking place in the marketplace. Because if the bad events are non-randomly distributed, there's a pattern to them. That means that you actually can strategically understand how to get around these problems, so that should the problem happen to arise in front of you in the path that you're going down with a particular contract, you stand a good probability of actually being able to come out the other side and keep in the successful transaction and actually reach the closing table and close the purchase or close the sale. So I am Justin Miller with the Chong Miller Group. We help people buy and sell homes, including condos and townhomes. We help people build wealth through real estate. One, by being far more knowledgeable about what's going on in the market than almost all of your competitors. And two, by being proactive and strategic about taking advantage of what possibly are the frictions in the market, and by protecting against the bad things that are existing in the marketplace. So I hope you found this helpful and useful. If you did, please feel free to share these videos again with everyone you know, and I will see you in the next video. Thank you.